I don't know if you've paid attention to the bond market lately, but bond market is literally crashing right now. Okay, in the after hours today, the bond market, the yields on the short end of the curve is literally crashing. If you look at the US 2-year Treasury yield, crashed, fell off the cliff. Right? Look at 10 years Treasury yield. Look at 30-year Treasury yield. It is collapsing like a rock. And it's not just the US Treasury bonds; it's the Canadian bonds as well. Look at the 2 years and 5-year Canadian bond yield crashing like crazy. We haven't seen this kind of strange move for quite some time. Okay, so moving 2% in a day in a bond market is unheard of. Okay, this is not normal, guys. So something is really happening in the bond market, and let's just unpack what's happening. So today we had two major announcements came out. Well, literally one announcement. The second is not that important. So the first one was Federal Reserve Chair Powell came out, and then he kept the policy rate as it is, but he was so dovish, his tone was so dovish, and he was pretty much guaranteeing that the September rate cut is pretty much done. Okay, they are going to cut rates in September, assuming things are going to remain same, which means the GDP remains same, the inflation data remains similar, it doesn't spikes up, then pretty much it is guaranteed that the rate cut is going to happen in September. And on the other side, the bond market, of course, reacted after that. So when they digest all the information from the FOMC policy statement and the press conference, and then after hours, it really tanked. When we saw the reaction in the bond market. And on the other side, in Canada, the GDP came out. It was slightly up and above the expected rate, 0.2% in the month of May. But of course, it's not that big of a deal that it could stop Bank of Canada to start cutting rates again. Okay, so September rate cut from a Bank of Canada perspective, that's also pretty much done. Because even though the GDP as a whole, even the real GDP, it looks positive, but when we look at the GDP per capita, because I've been keep repeating this narrative on my channel that there is a lot of population growth happened in the last 2 years. When you consider that population growth, then this GDP doesn't really mean anything. Okay, you have to look at it from a per capita perspective, and that is still looking negative from the 8 consecutive quarters. According to this chart, you can see the divergence between the GDP and the GDP per capita. And mind you, this is inflation adjusted. This is real GDP and real GDP per capita conversion. Okay, you can see there's a big divergence between the two, and it's getting wider and wider. Okay, so that means no matter what GDP is, the quality of life for Canadians is getting worse. Okay, so why we are seeing that significant move in the bond market? So there could be many explanations, but I'm going to give you one very simple explanation, because the bond yield and the bond value, they are inversely correlated. Okay, if the bond yields are crashing, that means the price of the bond is going up, which means there is a lot of demand from a bond purchasing perspective. Okay, there's a lot of buying going on in this bond market. So who's buying these bonds? Could be investors, could be financial institutions, banks, hedge fund owners, foreign governments. Okay, and there could be a lot of reasons, but one possible reason could be is the lenders of the smart money, the institutions who has a lot of capital on their balance sheet. If they are moving that capital into the bond market, which is considered to be a safe haven in the bad economic times, that tells you that those lenders are not comfortable lending that capital into the real economy, like small medium businesses or corporations for that matter. Okay, if the lenders are not willing to lend in the real economy, that itself tells you that the real economy is not healthy. Otherwise, why would not they be lending into the economy? Because the potential of innovation by driving capital into business is much higher compared to what you can get from a treasury yield, for example. Okay, you can only move that capital into the treasury bonds if you know that there's a lot of risk in the short term in the real economy, that I cannot even get my principal back. So let's just park my money into the bond market, even though the yield is so low, but my capital is protected, my principal is protected. That is the main that's one of the main reasons why this capital is moving into the bond market, because they're seeing more dangers, more alarm, more risk in the real economy, especially in the short term, and which is why they're moving the capital into the bond market. Okay, and that's the reason why these central bankers are now changing their position. Okay, the tone of Federal Reserve today was completely dovish. Okay, pretty much everybody is convinced or on the same page that the September rate cut is pretty much guaranteed now. Okay, why? Because the central bankers themselves are seeing the dangers, the risks, the deterioration in the real economy right now, which is happening. Okay, no matter how much rosy picture that the Bloomberg will play in front of you, or CNBC guys will play in front of you, if you look at the bond market, that itself is telling you that recession is almost there. The real economy is not sound, which is why the capital is not flowing into that market. You would say the stock market is still going up. Today we had some earnings, spectacular earnings from some of the NASDAQ companies, and the market went up. Yes, but the stock market doesn't really tells you the health of the real economy. It is completely detached. Okay, you would have a completely tanking economy, but the stock market might be going up at the same time. Okay, so that's another topic for another video, but this is exactly, I wanted to talk to you that the bond market is right now showing very strange moves, and that tells you the health of the economy. Okay, that tells you the reason why the central bankers are now cutting rates aggressively. And when Federal Reserve start cutting rate, the expectation right now from the major economists and the major macro geeks is that they are going to cut pretty fast. Anyway, this is just me talking to you. Let me know what you think about that. If you have any questions, put your comments down in the comments below. Check the links in the description. There might be some free stuff for you. If you need any help with regards to financial planning, estate planning, kids education planning, let me know. I have partnership with Aegon Research. I can connect you with one of the best financial advisors, and they can give you the honest advice. Until my next video, take care. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.